Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys, let's take a look again at the euro currency, because many people asked about the situation on euro currency. It's because it looks a bit different, and it's frustrating that when you see such action as a euro currency with this gap, it's very difficult to make an analysis what to expect in the nearest future and how this action will impact on in the nearest future, what we could see on the euro currency in the nearest sessions. So, as you can see, most part of our technical analysis in the weekly research now stands in vain, because, as we said, yes, we could prepare the technical view, but the political event that has taken place in France on elections definitely will overrule the technical background. So, and we honestly have predicted that the results of the elections will be a major driving factor, and it could change the overall situation significantly. That's why yesterday we have taken a look at the New Zealand dollar, because there was more transparent technical scenario, and as you can see, it's really very interesting, because New Zealand dollar right now is moving down, and in general this setup is really very nicely looking. So meantime, yesterday we have seen that although market has formed the gap up, it doesn't hurry to close it. So it's calling and stands above this gap, and here we have interesting situation, and let's try to estimate what we should watch for and what could happen in today, tomorrow sessions. So first of all, market stands strongly at the overbought area. I don't have the oscillator predictor here, but it stands significantly in the overbought area. Also, although this upper reaction was really dramatic, but for us it hasn't brought any problems, because we have the bearish view on the euro currency here, and we are waiting for a breakout on the neckline, or this trend line. This breakout hasn't happened, we just haven't got our entry opportunity. The same for intraday charts. There we haven't got any reversal patterns for taking the short position. That's why that was just a blank result for us. On the nearest time, as you can see, guys, here market has formed really very rare pattern. This pattern calls as the last engulfing. This is bullish engulfing pattern, but it forms not at the bottom as we are usually looking for, but on the top. And sometimes the pattern that has been formed on the top indicates the end of the bullish trend. Anyway, guys, this pattern should not be treated as bullish or bearish, but mostly it depends on the breakout of this range. So if market will move above this area, above the range of this pattern, and continue to move higher, it usually works as a continuation pattern. But if market will form after that the black candle and will drop below the range of this pattern, this could mean the reversal and returning back down and starting of the bear trend. Here, guys, we of course do not have the trend. This is just short-term upper reaction, but this is just the feature of the last engulfing pattern. Here market right now stands in the resistance cluster. So take a look, that's this daily confidence resistance, and 109.75 approximately the major fib level resistance. Also we are daily overbought, so the combination of the fib level with the overbought creates the Jordan upward directional bearish pattern that calls the stretch. Also, guys, take a look, market stands very close to the completion of our target. So as you can see, overall action with these head and shoulders was really dramatic. It was very difficult to predict that precisely in that manner that this target will be hit. As you can see, sometimes this happens. Anyway, if we will not treat it as the head and shoulders, but we have this ABCD pattern, market stands just a few pips below the target. It means that as soon as market will complete this target around 109.75, this reasonable retracement could start, and maybe this retracement will lead to the closing of the gap. So, that being said, within the nearest session, market could move slightly higher for 40-50 pips probably, and then it's possible reversal could happen. But the problem is that market stands at the daily overbought, so that's why maybe it will spend some time in the tight range to leave the area of the overbought before the upward action will continue. That's what we could say on the daily chart. On the hourly chart, we have approximately the same picture, because here we have the reversal pattern, and this reversal pattern is a butterfly sell. So market already has complete 127 extension, right now shows minor retracement here. 1618 extension, guys, coincides. It's 109.79 approximately. It coincides with the daily target of the large ABCD pattern. Also, you could recognize here some kind of the three drive pattern. So this is first drive, second, third, but to be honest, the extensions of these drives are not precisely matched to each other. So if you will plot them, 127, 1618 extensions, you can see that second drive stands at 1627. That's as it should too. But it's a bit difference between 127 and 1618. It should be somewhere around that manner. So they should be very close to each other. But here it's a bit not quite close. Anyway, some kind of the three drive pattern is forming there as well. And its target approximately stands in the same area. Slightly higher than 109.73, but in general stands very close. So that being said, we suggest that taking into consideration all these factors, our suggestion that most probable action on the euro currency is reaching of this area and then starting moderate retracement to the downside. Maybe this will happen precisely in a time between the first round of election and the second round of election on the 7th of May. So it's approximately 2 weeks. This market will have enough time to make a reasonable moderate retracement and close the gap. So that's approximately what we could get in the nearest time. This of course could happen if nothing really drastic and outstanding will happen again. Something on the geopolitical sphere, something unexpected. That's just the technical picture that we see right now in the euro currency.